also welcome Anand Tandon, who is joining us on the show right now. Hi Anand, good to be speaking with you. Everybody is just looking out for that answer, Anand, that when is this selling going to stop? At this point in time, some are also flagging off that it is a good time and it's a sale that is going on, the benchmark indices and the markets as well, where you can actually go ahead and increase your exposure. And some are even flagging off that please don't have much return expectations from this particular year. What's your view and which side of the fence you are in?
Well, the two of them seem to be contradictory advice, isn't it? If you don't have expectations, there is no reason to be hurrying to buy. At the end of the day, the market will start moving up only when there is adequate return for the risk that you are going to be making by investing in equities. Otherwise, you're better off putting money into fixed income. The fixed income rates even now continue to be fairly attractive. So, in my view, there is a little bit more to go. It's difficult to take a call as to when to start buying, but if you were to look at what you would like to buy, most of the companies continue to trade at humongous valuations. More than half the Nifty continues to trade at more than 50p. The ones that don't are actually trading at fairly high P, given the fact that they are commodity companies. So largely, I think there is still a reasonable amount of downside that still prevails, especially in the small and mid cap space, maybe less so in the large cap. I would think that, if you really want to start buying, you would want to be a little picky about when any particular company has reached a level which you feel comfortable with.
Right, Mr. Tandon, good afternoon. Cheryl also joining in the conversation. And I wanted to get your views on what exactly transpired in the entire historic meet between the Indian Prime Minister as well as Donald Trump. Though we were pretty enthused with the commentary coming in from both of them at the helm of the state, but I just wanted to get your views. What sort of takeaway should one go home with when you talk about the talks between both of the head of the states?
Well, for most part, it was the posturing which was important. That given the fact that there is a new president back in the U.S., you want to make sure that the Indian Prime Minister and the U.S. President reiterate the fact that the countries are coming closer, etc. I think those are largely irrelevant from a market perspective. What matters is, however, what will happen in terms of tariffs. There are not too many overlaps that I can see where India exports and has the potential to import from the US. They are largely different sets of items which are imported and different sets of items which are exported. So when they say reciprocal tariff, I don't exactly understand what that means. I mean, there are rare cases where you are unable to buy we could be exporting motorcycles or cars to the US, whereas they are not able to export that to India. But the numbers are going to be rather minuscule. For the most part, we buy defense equipment from the US, for example, and we export, let's say, IT services. I don't think there is much overlap between the two, and therefore, reciprocal tariffs is something that we'll have to see how it actually gets implemented. The rest of the thing really doesn't matter. I mean, all said and done, I think India's growth is not being affected by anything that's happening necessarily in terms of overseas market. It's mostly done. The problems lie within the country. There is a certain lack of purchasing power, and the markets are fairly narrow in terms of where the money is, and therefore we have to find ways to stimulate that growth. It would certainly help if the global market was expanding faster than it is right now. But given the fact that even now the net trade in India is still a smaller part of the overall economic growth, what matters internally is a lot more important for the stock market.
Right, but let's have a look at the pharma index as well, because what we are seeing is that Nifty Pharma is also one of the sectors that is under tremendous pressure today, because all in all these large cap pharma names are not doing well. It was the US president talking about some of the tariffs being implemented on the pharma names as well. Nothing specifically coming in on India front, but if we look at the index, is almost down 3%. It's retesting its January lows levels as well. And most importantly, these levels were actually seen back in July 2024. Naresh, what's been your reading on the Nifty Pharma? Because the structure is not looking that great. And even some of these high beta names in the pharma space, take a look at Laurus Lab, Granules, they are down anywhere between 7 to 8%.
Coming out of US as such on the index. But overall, it's a very similar chart to a downtrend for a lot of other indices. So we wait and watch for that 20,500 mark on the pharma index and then see how it turns. Let it consolidate for a day or two. Does not look like a breakdown per se, which could happen in a major way, but would take some time volatility here. A lot of stocks like Laurus Labs could actually be interesting given that it's corrected back to the 500, 550 band, which it actually broke out of. So there could be selective opportunities with a medium to long term outlook in the pharma space.
Rudra, let me come to you and ask you the multi-million dollar question that everyone's asking. When will the mid-caps actually stop falling? Given the fact that everyone's trying to hope that, yes, this will settle down sometime soon, maybe we should go ahead and put our bets into mid-caps, given the fact that the returns for the broader markets have been way sharper than what it's been for the large caps.
See, with my 2 decades of experience, one thing is very clear. If market starts recovering, money will first flow towards large cap and then towards mid and small cap. So unless you are a very long-term investor and you understand companies well, fundamentally you understand their business, and more than all this, if you agree with the quality of promoters and the business as such, then yes, these are mouth-watering levels where you can buy. And if you are ready to see another 5, 10, 20% kind of a correction even from current market price, and if your time horizon is very large, then no problem, you can adventure buying this falling knife. Or else what I would advocate in this market to general retail public will be to start buying large caps which are relatively performing well. Avoid mid and small cap unless you understand the company and the promoter very well. Look at stocks like, for example, HDFC Bank, Bharti Airtel, or look at even stocks like ITC. On large caps, you have a lot more better companies. And even if you ask me on mid cap, I want to buy larger mid caps where results were very good. For example, look at Indian Hotel. Results were very good. Stock is available now at good price. Even in fact, Bajaj Finance, even after the move, what you have seen from 7,000 to 8,500 in this month, I feel Bajaj Finance is still a good stock to buy if you want to make a portfolio. I will avoid buying stocks which are down 50-60%, and you can't buy them because they're down 50-60% from the top. You have to buy them because of their intrinsic value and the visibility of earnings what you have. So my simple suggestion will be, right now look at large caps, let the market make the reversal, let the turn come, let more money start flowing in into the market, then venture into good mid cap and small cap, or else this is not the time to definitely catch the falling knife.
Catch the falling knife, definitely. But Mr. Tandon, the fact that investors always want to be risky, and the fact that the way how the broader markets have moved in the last 4 to 5 years, I think people have just so gotten used to catching the falling knife, not realizing that what it could be, and that could actually bruise you at one point in time. I want to understand, are you finding any value in the broader market names, especially those who have corrected like 50-60% from the top?
Well, the broad market is a very large market, and there could always be some companies which may appear to be cheap. But with that caveat, I would argue that by and large, whenever liquidity dries up, the small cap companies actually start to tank quite badly in terms of market, simply because they are largely illiquid. What I find surprising also is that over a period of years, I have observed that the earnings seems to follow the stock market, especially for companies where corporate governance numbers, corporate governance levels are leaving something to be desired. So it wouldn't be surprising to find that companies, as they start losing market cap, also start reporting worse numbers. And that is the down cycle that creates a problem for smaller companies, especially those which are relatively unknown. Now, this is not a generalization, and as I said, there will always be good quality small companies. After all, that's how you grow into large company. But broadly, I agree with the gentleman who was just before me in saying that, look, whenever the market turns, it's the frontline companies that will do well. There is clear visibility, for example, in Bharti, why the numbers should do well. The capex is behind them. The cash flows will start to come in. So you have a free cash flow, which is going to grow. It's now a duopoly market, more or less. And the ability of these companies to keep on raising prices is unquestioned. So, for example, you will be getting them at a better and better cash flow yield. Why would you want to experiment, especially in a market where it's fairly highly uncertain as to where the earnings growth can come from, when you have some company which is already well known, well researched, and where it is clear that the free cash flow numbers will keep improving.
All right, that's the take coming in on the broader market. So every time there are some stock-specific opportunities when it comes to the broader market space, but definitely talking about the markets what we have seen is that at least in the short term, a lot of our experts are definitely flagging off. The bottom is in place. Let's see that what actually holds for the upcoming week, but definitely a lot of these stocks are in focus. And today what we are seeing is that select IT names are trying to make a comeback. It's been a mild recovery from the day's lowest point. Stocks like TCS, HCL Tech, even Infosys are holding on to the gains of half to 1%, at least that's what we can spot on the green side at least. But talking about the markets then, Indian equities have been under pressure amid all the kinds of uncertainty, and we might be looking at some relief with a short-term rally. But will that rally lead to Dalal Street to higher levels? We try to find an answer from CLSA's Vikas Kumar Jain. So let's go across and listen into his take.
There could be a rally, but the extent of the rally is something where valuation comes into the picture automatically. Because if from where we are right now, it is going to be tough to imagine that going to be a 20-30% rally. However, can there be a very quick 5-7-8% rally which allows sentiment to go to neutral or to bullish a little bit, and then we could have another correction? Absolutely. I mean, that's something which, in fact, if you were to gun to my head, if I have to choose one, I would say maybe a rally, but not really going to all-time highs, and then maybe more range bound or corrective action.
Right, that's the view coming in from Vikas Kumar Jain from CLSA to talk about the markets and where he thinks the market is headed from here on. But talking about the markets today, a very good steady recovery that we've seen from the day's lowest point. No doubt we are like 14% down on the benchmark indices. You have the broader markets that's fallen more, but that recovery is actually steady when you talk about the markets. Take a look at like some of the stocks that have just come out with their earnings, or the fact that they're moving. You have Radico Khaitan that is actually seeing a downtick, because you have a lot of communications around the fact that the government is cutting tax on imported bourbon whiskey, and that sort of has actually had a very negative impact on Radico Khaitan. And not just Radico Khaitan, maybe we can just bring up some other counters that could be in focus. I'm not very clear or sure if they are also a part of the bourbon whiskey category, and that could have an impact. Maybe we can just pull up the charts of United Spirits for a second and just see how that one is reacting in trade today. Yes, that one is down about 2.3%, as well as Global Spirit is the other one. United Breweries has other concerns of it, given the fact that the Telangana price is not as hike is not as much as they are expected. But let's take a look at what Global Spirit is doing. Tilak Nagar Industries, yes, but Radico Khaitan is the one that is seeing the maximum hit on that particular news development. You also have Samvardhana Motherson, erstwhile Motherson Sumi, that is also reacting to his numbers. Short while ago came out with his numbers as well. So a lot of news specific action actually in today's trading session, Shrishti, given the fact that we are actually at the fag end of the earnings season. I'm sure you're going to heave a sigh of relief, given the fact the earnings season is now coming to the end.
Well, certainly, Cheryl, the earnings season is now coming to the end.
Don't come to an end.
Absolutely. Absolutely. But definitely looking out for the next week. Let's see that whether markets show some bit of a recovery or not, because it's been quite a tough week for the market participants.
Not tough week, it's been tough 1 month, because there have been like a series of events that we've been watching out for. Yeah. First, you spoke about the Trump admin taking over. Then you had the Federal Reserve and the outcome from that particular front. Then you had the budget. Then you had the RBI meet outcome. Then you had this big event that we've all been watching out for, right? The head of the states actually meeting. So it looks like all of that will settle down, and the biggest factor of all of being for the domestic market being earnings. So I think all of that settles down, the dust settles down. So let's see how the next 2 to 3 weeks pans out. It'll be a little lull period, because you'll not have too many earnings to watch out for.
Well, certainly, and but let's stick to the markets then, and let's also try tracking some of the stocks and also try tracking some of the ideas from our experts. And let's in technologies. It's been a while that we have spoken about or touched upon this particular counter, one of those high beta names, and definitely have participated in this fall. But now it's coming in on the sell radar for Naresh. But on the flip side, ITC, that still stands out for him. But Rudra, what about you?
See, I am picking again two relatively very strong stocks. Number one, buy on Bajaj Finance. This stock, even after making that big move from 7,000 to that 8,400, 500 zone, made some amount of retracement of this big profit. And we saw some profit booking. Now Bajaj Finance is again relatively very, very strong. And in this market recovery, this stock is definitely participating on the upside. So buy Bajaj Finance, keep a target of 8,500 with a stop loss of 8,370. And for me, even HDFC Bank looks relatively strong. In fact, all private banks are looking relatively stronger. Matter of choice whether you want to pick HDFC, ICICI, Kotak Bank. One of these can be great buy. I have picked HDFC Bank. Look at targets of 1,730 with a stop loss of 1,690.
All right. So for Naresh, it's been a buy and a sell call. For Rudra, it's been two buy calls. But Naresh, of the last few trading sessions, I've noticed you've given a buy and a sell call.
So this is the time where you want to be defensive or rather trading much lesser size, given that there is no clear trend. We've seen the difference in terms of divergence. You have Nifty holding on to 22,800, but the small cap and the mid cap indices and a bigger part of the broader market making new 52-week lows. And because we've corrected almost 30-40% in a lot of stocks, there are not a lot of sell trades. And the recoveries are also not strong. So we saw that recovery from 22,800 to 23,800 on the Nifty. But we didn't see a sharp recovery on stocks. So this is a time where you want to wait out, let the consolidation play. And once there is a much stronger trend, trade more.
Right, so that's the defensive strategy that Naresh is playing with, one buy, but do try to manage some of the trades with a hedge, with a sell call at least. But Mr. Tandon, what's been your take on the auto space? Because it's been not that a bad earning season for the auto counters, and some of the companies that have actually missed the street estimates, they were punished quite significantly. Any segment that stands out to you? Because when we were talking to some of these commercial vehicle leaders, they were actually flagging off and they are hopeful for a strong quarter in the times ahead, while the passenger vehicle demands remain subdued. But two-wheeler companies are also not coming out with a very negative commentary. So any stock or rather any segment would you like at this point in time?
Well, clearly from the passenger vehicle space, the only area that is doing well is the SUVs. And Mahindra has taken the lead there and has continued to maintain its lead, though there are others which are threatening to roll out models which can take away some of that. So far, we haven't seen evidence of the market preferring any of the non-Mahindra models in any significant way, which will erode their market share. So the rest of the market really in the more premium side continues to remain fairly narrow. And the latest budget may actually help the lower priced cars, but we have yet to see evidence of that. It will take a while for that to play through. Two-wheelers, I am not very bullish. I think competition remains very strong. There are more and more models coming in. The EV market is going to pick up there. And more importantly, there are new players in the field which will try and shake out the existing players. And as a consequence, I think the fight is still there. Good for consumers, not so great for the manufacturers. On the LCVs, etc., as you said, there is expectation that if you really expect the construction cycle to revive, especially on the capex with the government spending more in the new financial year, then you may actually get some more demand. In the LCV, so far, it has not been particularly exciting. It's kind of tepid. And while some of the construction equipment companies have done reasonably better, but broadly, there isn't much, to be talking about. The larger players which are in the international markets like Tata Motors, well, there is complete mayhem in the international markets. If you look at any of the international manufacturers, you will see both US and China are in the doldrums, and those are the two largest markets that are there. Besides the new EV players, especially the Chinese companies have kind of shaken out the more established EV manufacturers. So we are seeing a shakeout there. Broadly, I think this market remains somewhat difficult to play. As I said, valuations are stretched for companies like Mahindra, but they have the best portfolio overall.
All right, so that's the view coming in from Mr. Tandon on the entire auto space, given the fact that this week we are ending, and I think hopefully this week marks the end of a lot of news flow actually surrounding the markets. No doubt you have the pharma sector that has been at the forefront of this entire discussion, as well as the consumption space, as well as the banking space, consumption space, given the fact that for the last 15 days, we've only been talking how the budget could impact the consumption spend, how you will have a shift now come the next financial year to consumption, and especially the consumption discretionary space. Then you had the RBI meet outcome where you had the cut in the interest rates and where everybody started now tilting towards the interest rate sensitives. And yes, that's one of the sectors that we need to watch out for. And a lot of analysts, a lot of a lot of experts have been touting the fact that it could be the banks that could lead from the fund to going ahead. Apart from that, now this week we've been only talking about the pharma sector because a lot of news flow surrounding to the fact that the pharma sector would be one of them that could get likely exceptions or exemptions from the tariffs coming in from the Trump administration. That's not how it's panned out because we've not got it in black and white at this point in time. And that's one of the reasons why you've seen the pharma sector actually see a sharp slide this week, 5.5% coming in. And it is a major contributor to our exports into the United States. That is the pharma sector. And that's one of the reasons why you're seeing that sort of a result in most of the pharma names. But on that note, thank you so much, Naresh, Rudra, as well as Mr. Tandon for joining us on the show to take us through what one should watch out for when you talk about the markets and the way ahead. But Shrishti, yes, this week has been a week, a lot of news flows, and it's very heartening to see that yesterday we did see a sharp up move in the markets. We did cool off from those levels, but today is the opposite. We are trying to actually claw back from the day's lowest point, 0.4% downtick coming in for Nifty, not too perturbed about it, given the fact that we are holding on to that range.
Well, certainly, Cheryl, it's been not a great day for the markets. At least it's a sea of red, but let's call it a day. And let's call it a week as well as we moving closer to ending this day. Let's go across to we will get to Snehi, who will be joining us for the wrap of the market. But looking at the markets and the index, it's been not a great day and even not a great week rather, because this particular week we have seen a lot of the volatile moves. Wednesday was a decent day. Then comes Thursday, it was a volatile day. On an intraday basis, we have seen such wild swings. And Friday itself, though the start was really good, you remember GIFT Nifty was actually up around 100 odd points, and we were just talking that there has been a softer stance by Donald Trump on the tariff impositions. Nothing major has come in. The market should be able to absorb this, but doesn't seem like so, and the concerns still persist. We will watch out for the FIDI numbers as well, but